Welcome to the Christian Parent Investing Journey as we develop talents for purposes in life. Breaking news yesterday about Huawei's Meng Wanzhou flies back to China after a deal with the US. Well, it is a big deal, putting politics and trade war aside. It is a major pivotal moment in history and for investing in China since joining WTO 20 years ago. The 3 years-long China-US-Canada power play over Huawei or the recent high-profile action of Bank Group's $35 billion initial public offering last November. As we connect the dots, it's not difficult to see a change in dynamic and a sign of progress. In my opinion, Meng's return has a symbolic meaning and served as an evidence of the preparation for the 100th anniversary of the Communist Party of China. I'm not here to talk about politics, but if we are to talk about long-term investing, meaning to invest over the next 5 to 10 plus years, it would be silly to ignore one of the fastest-growing countries with a proven strong growth momentum. Let's listen to Charlie Munger and Warren Buffett on their long-term investment perspective on China.
This question's for Charlie. It comes from Stephen Tedder in Atlanta. He's been a Berkshire shareholder for 10 years and says, you and your friend Li Lu have been very optimistic with respect to investing opportunities in China. BYD has performed spectacularly for Berkshire since its initial purchase in 2008 and is currently valued at $5.8 billion. The Daily Journal recently bought a large position in Alibaba after founder Jack Ma had been reprimanded by the Chinese Communist Party, and Ma's other company, Ant, was not allowed to proceed with its IPO. What are your current thoughts on China and whether the communist leaders will allow businesses with strong leadership to flourish in decades to come?
Well, I think that the Chinese government will allow businesses to flourish. It was one of the most remarkable things that ever happened in the history of the world when a bunch of committed communists just looked at the prosperity of places like Singapore and said, the hell with this, we're not going to stay here in poverty, we're going to copy what works. And they changed communism. They just accepted Adam Smith and added it to their communism and said, now we have communism with Chinese characteristics, which is China with a free market with a bunch of billionaires and so forth. And they made that shift. They deserve a lot of credit. Warren and I are not quite as good at that as changing our minds in many cases.
Yeah.
And that was a remarkable change coming from such a place. And of course, it's worked like gangbusters. It had this enormous growth in the average income of the average Chinese. They've lifted 800 million people out of poverty fast. And there was never anything like it in the history of the world. So my hat is off to the Chinese. And I think they will continue to allow people to make money. They've learned it works. The Chinese, I loved what the guy said in the first place. I don't care whether the cat is black and white as long as it catches mice. That's my kind of talk.
In that list of the 20 most valuable companies, just 3 are Chinese. Now, if you're looking out 30 years, how many do you think will be Chinese? My guess is more. But I don't think it'll top the United States. But who knows? It's amazing what has been accomplished, and
yeah, really amazing.
And they found what works. I mean, there's nothing like finding something works in order to sort of reinforce ideas over time, and we'll see what happens.
Let's get back to investment opportunities since the pullback of the Ant IPO. As Alibaba owns about a third of Ant Group, its stock price tumbled to 7% on the day, and about a 53% drop to recent low at $145 from about $310 the day before China pulled the plug on Ant's IPO. From the SEC filing, we believe that Charlie Munger, through the Daily Journal, bought $37 million into Alibaba back in the first quarter of this year, which is well above $200, maybe in the range of $220 to $250. A few other famous investment gurus also bought Alibaba in Q1 and Q2 this year. Ray Dalio, Monish Pabrai, and Lai Liu, to name a few. Please be reminded that I'm not a financial advisor, and this video as well as this channel are simply to share my own opinion and investment tactics. You should always do your own research for any investment decision. As Alibaba is currently at around $145, you can see that a call option for $145 by January 19, 2024 is priced around $43, which, when added to the strike price of $145, is about $188, well below $200, the next major resistance level. That is, $188 can potentially be reached during the next major rebound of Alibaba. Although no one knows if $145 is already the bottom or when will it start to rebound. It is reasonable to assume that it will rebound given the 33% revenue growth and $30 billion operating income from its June quarter earning results. A $43 option price over current price of $145 is about a 30% cost or time premium, which means this option can only break even at $188 without factor in the opportunity cost. Yet, as Peter Lynch illustrated nicely about investing, the amount can be lost as 100%. Yet the upside could well be 200%, 500%, or a 100-bagger like Microsoft or Amazon. This discussion on LEAPs, long-term equity anticipation securities, is for capturing the potential long-term gain and limiting the potential loss, while leveraged to multiply the effect given smaller capital. If we compress the history of Alibaba IDR, it's easy to notice some patterns and an overall trend. Please note that the chart is using logarithmic scale to better represent any exponential growth, given a 10% increase of $10 is different from 10% of $1,000. I'll leave you with this chart to project your own price range of Alibaba by Jan of 2024. If you find this useful, please think of someone to share this with. Alone we go faster, together we go further. May we pray for wisdom along our investment journey. Have a joyful day.